Welcome back, Belito. I look forward to welcoming our next guest, the ever knowledgeable and ever beautiful Lynette. How are you?
Good morning, good morning.
Fantastic. Always keen to learn from Austral Accounting. You always have such great advice to give us.
Yes.
And today we are going to be focusing on the deregistration process and dormant companies. Give us an intro.
Okay, so I think I would like to break it down into two groups. So a lot of time people decide they're going to start a business, but they don't actually then proceed with their business idea. So they have this company and it's just dormant, it's parked somewhere. Okay? What people don't realize is that the formation of that company now gives you certain obligations, and one of that is filing returns. For a company, you have to ensure, even if you're not trading, that your annual return is filed with SIPC, that you file provisional tax returns, that income tax returns are filed. Otherwise, you are going to be on the wrong side of the law, and it's going to cause a lot of problems. So it's important that even though it's not doing anything, you still have those statutory things that needs to be done. Yes. So those are the dormant guys, but then when you get to a stage, especially now after these tough trading conditions, you've decided, listen, it's now, I'm done, I want to deregister. It's important that people understand that the deregistration process is quite long. So what needs to happen is you need to have a look at your company, what you've been registered for, and then go about in making sure that all your returns are filed with SARS so that you can get tax clearance.
Do people ever confuse their VAT requirements or their taxation requirements with the amount of turnover that their company does?
All the time. All the time. I think there's a lot of misconception out in the public thinking that, I'm not a VAT vendor. It doesn't mean I need to file a provisional tax return. They're very separate things in the Income Tax Act. The fact that somebody is PAYE registered, then they think, yeah, but I'm paying my PAYE monthly, but they forget that there's still tax returns and company annual returns.
There's still obligations from you as a business owner or a company register to file your documentation that you need.
So when you then look at the deregistration process, what has to happen is you obviously have to get tax clearance and then send those documents confirming that your bank account has been closed, that the business doesn't have any assets or liabilities to SIPC. But that would take anything between 6 and 9 months because SIPC gets the documents. It has to be gazetted that this company is requesting to be deregistered out of the register. So it's a long process. And then the other thing that people really forget is when you are a VAT vendor, for argument's sake, there is an exit VAT, if I can call it that. So let's say, for argument's sake, your restaurant, you claimed all your input VAT on all your capital equipment, right? Now you've stopped trading. You either sold the equipment or retained the equipment. And the value needs to be put on that equipment. And SARS needs to recoup their VAT portion thereon. It makes complete sense. You claimed it at the beginning. At the end, there must be a payback. They need their pound of
flesh, yeah.
Yes. And so what people tend to forget is they say, yes, I've ceased trading. But they forget that there's that liability in the VAT that's sort of hidden in the back if there was any capital input VAT claim.
Do people ever confuse the depreciable life of their assets that they have versus their VAT requirements from SARS on a deregistration process? Do they think because I've owned this equipment for 5 years, I can't possibly have to pay anymore?
Yes, but you have to realize that everything has a value. Just because your book value, let's say, is 100 Rand, that fridge still has a sellable value of 1,000 or 2,000 Rand. Even if it is an auction value or a complete out-of-hand value, there is a value attached that isn't really reflecting in your accounting.
And there is a
reports.
wind-up process that needs to be
Yes.
followed.
So it's really important that people think through all the aspects and know that it's a long process. So never mind the SIPSI deregistration, even on the SARS side, you look anything between 6 and 12 months for them to make the file dormant, and then only after a couple of months of dormancy will they proceed with the deregistration. And SARS won't proceed unless SIPSI has deregistered. So you have to do
It's
both.
quite a
Yes.
process.
So if you're waiting 9 months for SIPSI, you can understand that SARS is waiting to confirm before they will deregister you for your tax times.
And is there any particular strategic value in deregistering versus keeping the company running even though you aren't trading or using it? Should you deregister? Is it the right thing to do?
I think it is the right thing to do. A company is relatively easy and fast to set up in reality. So keeping something, it will then cost you admin and a statutory obligation to file returns. So now you have to remember that August, February, tax, all these things. And you go about life, I mean, it's November. How did I get here?
Sure.
You could have forgotten already about this company that you have. So I would deregister. I don't see the point of having all this admin burden. And when you're ready, start a new one.
Simple.
Yeah, I would definitely advise. If you've got all of these entities lying around, clean up your admin life. It
Definitely.
makes it easier.
Simplify it.
Yeah, definitely.
Great. The People's Accountant, thank you so much for coming through. We always love having you on the show and imparting your knowledge. And
It's a
thank you so much for being here once again. Stay tuned, Belito. We look forward to showing you another fantastic interview with Letitia Cox after this. We'll catch you after the break.